as well as Schneider Electric. What are you picking up, Anushi?
Hey, morning Alex. So I'll start off with the earnings list first. Now, the Brigade has come out with its Q1 FY25 numbers, wherein they've reported about a 65% growth in their revenues, while the EBITDA saw about a 67% of an increase. Now, both of these were above expectations. Again, in other key highlights, also the pre-sales saw about a 9% growth at 1,086 crore, while their pre-sales volume rose to about 1.15 million square feet. Now, if you look at segment-wise performance, real estate was the clear outlier here with about 105% growth, followed by leasing and hospitality seeing about a 23% and 11% growth. Moving on to Schneider Electric now. The company reported almost a 20% of a growth in its revenue, while it's the EBITDA which is in focus with a 67% of a growth here. Now this EBITDA, we are seeing this increase because of two reasons. One is the material cost contribution to the overall revenue has gone down to 60% as compared to 63.7% in the last quarter. And employee cost contribution again declined to about 13% as compared to 14% in the last quarter. Now order book status of this has new orders increased to about 19% at 531 crore, which took their order backlog to about 1,294, which is again a 15.6% of a growth here. Now coming to other stock in focus is Mech projects, and this is on the basis of an order win of 111 crore from a captive power plant in Nigeria. So this order pertains to operation and maintenance of the 400 megawatt captive power plant situated there. The execution timeline for the same stands at about 2 years, but this is not the only order win. Even if we go back a few days ago, the company had received another order of about 143 crore, and this is from Meenakshi Energy. So we are seeing domestic plus international orders coming in from Mech. So these are the three stocks that are in focus today.
All right, thanks so much, Anushi, for getting us those details. And there's one more stock that we should be looking at today, and that's Interglobe Aviation. This is on the back of a note that has been sent out by MK. It's interesting because they've maintained a buy, and there's an upside that is indicated based on the target price of as much as 25%. To tell you about what that note contains, I'm joined by Harsh this morning. Harsh, what's in that note?
Well, Interglobe Aviation has had a 18th anniversary event, and pursuant to that, they've launched a slew of new premium products and premium offerings for customers. This should, of course, further augur an already very strong market share that Interglobe Aviation has and Indigo under the brand has in the Indian skies. You're seeing 60% plus in terms of that market share, expected to hopefully inch upwards. But what MK is really suggesting or bringing out is, as part of this event, they have launched their Indigo Stretch offering, which is a business class domestic offering. The introductory price for that is 18,000 rupees for the Bombay-Delhi route, and it's going to get launched somewhere mid-November. That's the expectation. Now, this was much awaited, and of course, this should further augur market share. MK very bullish on this one, 5,300 being the target price. You also have a City Note, 5,200 being the target price. So 20% plus upside by both of these houses on this one, Interglobe Aviation. Keep your eye out on that.
All right, thanks so much, Harsh, for getting us those details. I was very quickly taking a glance at the Asian markets, and they look sanguine. They look good at the start today, and we've also got an indication for a positive start for the Nifty 50. That brings us to the end of this particular edition of All You Need to Know. Lots lined up ahead on India Market Open. Do stay tuned. This is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right information.
Hello and welcome. You're watching India Market Open. It's Tuesday and today looks so much better than what it did look like yesterday. It's wild, wild west for global equity markets. Big falls, big recoveries. Of course, this is no one can call this a top or a bottom. We've agreed on that, but there's so much happening.
आप आए बाहर आए
आप आए सर्दी लेकर आई.
Yeah, but gyrations across the world. Very difficult to call this as the one which will reverse the whole thing, but it certainly looks positive because the yen has also made the change versus the dollar. So lots happening out there, but today is a day of bounce for sure. Must say, Tamanna called it yesterday.
Well, I didn't want to toot my own horn, but thankfully you've done it. But actually, if you watched all of our coverage yesterday, we talked about a couple of things that could happen, and one of them was very strong policy statements. You heard from the Japan finance minister, you heard from the Japan prime minister, so that effort to sort of talk down the bears has been ongoing since yesterday. Very positive service PMI data, service sector data out from the US, so that also has contributed to change the mood, and of course technical factors. Now, having said that, it wasn't a rough night from our perspective for US trade, but look at the US futures. US futures have bounced back after the worst day of trade in 2 years. We should look at what's happened last night in US markets, because it tells you that the story is neither over nor is it going to get so bad, but there is more to see. I mean, your NASDAQ was down 3%, your Dow was down over 1,000 points, so there is a lot of pain, and some might laugh it off as one correction, etc., but there are concerns persisting on what's happening in the US economy, and it is wait and watch. More data will be expected to know which way that wind is blowing. Now let's just talk a little bit more about what happened. The AI sell-off is one theme which could last a little longer than the kind of correction we saw, because remember, AI-led stocks had run up the most as well. So for example, an Nvidia lost 6% and Apple was down about 5%. So companies which are betting very heavily on AI and were running up because of that could see a bit of a pullback. Meanwhile, definitely, like I said, positive data from the service sector. The July service PMI was up to 51.4% versus estimates of 51%. That has seen a boost, which is why you saw the 10-year also rebound to some extent. After that positive data, it was at 3.84%, so higher than yesterday. And not necessarily a bad thing. Usually we like a lower 10-year US Treasury price, but not necessarily a bad thing, because we swung to the other extreme of poor economic data yesterday. Crude has also rebounded. from its lower levels. Remember, crude was feeling the pressure because of concerns of a global recession, but the Middle East crisis escalating and concerns that this will get worse has seen a bit of a jump there. The NYMEX up nearly 2%, while the Brent was at 77.29 a barrel. Asian markets, though, is the story this morning. I mean, look at that. Nikkei up 9%, was at one point up 10%. At one point in trade, pretty much all the losses from yesterday regained. Kospi doing very well as well. Last I saw, Kospi was up about 5%. So you have seen Asian markets, which were most badly hit, seeing some kind of a rebound. The implied open is what we should see, because India also could see a good start, at least 174 points up as far as the Nifty implied open is concerned. And just one more data point before we get to Edward Yardeni, because it's all about the flows. Look at the flows numbers yesterday. Astonishing. The highest FII selling yesterday since the 4th of June, when the election results came. Over 10,000 crore rupees were sold. DIIs bought. All of you whose SIPs go out on the 5th of every month, you've possibly contributed to that. 9,156 crore rupees in buying so far in highest so far in 2024. All right, Dr. Edward Yardeni, President at Yardeni Research, joins us this morning. Very good morning to you from where we are sitting, but thank you so much for joining us, and always a pleasure to speak with you. I want to understand from your perspective how persistent these recession fears are in the US.
Well, clearly, part of the reasons for the sell-off on Friday was the weaker than expected employment report for July. However, we had a really close look at it and concluded that it might have been the weather. I know that the Bureau of Labor Statistics said that Hurricane Beryl, which hit Texas in early July, didn't have an impact, but still there was plenty of evidence that the weather was bad enough around the country that it might actually have depressed the data. And today's, as you mentioned, today's data on the non-manufacturing purchasing managers look pretty good. So all in all, I think the economy is still pretty resilient. I think we'll get over this latest recession scare. You know, we've had this recession fear for the past 2 years. It's the no-show recession. It's the most widely anticipated recession that hasn't appeared. And there's still concerns that it might at some point, but I don't think it will.
Dr. Yardeni, good evening to you.
Good evening.
The fears of the market, and three-pronged, right? The recessionary fears, the yen carry trade unwind, which I think was the principal one, and possible lurking geopolitics. Now, my question is it possible to predict whether the extent of fall that a yen carry trade unwind can do has already happened, or is it difficult to call that out right now?
Well, it's difficult, but that doesn't mean that I can't go and agree with your answer in the affirmative to your question. I think we may really have seen of the carry trade unwind happen pretty quickly. And I think to the extent that key Japanese officials are basically saying either implicitly or explicitly that maybe they're going to be careful about any further tightening, that in turn would lead to some stabilization in the yen. It certainly has seen some improvement in stock prices in Japan. And so this earthquake that we saw in Japan, it clearly spread very quickly to the rest of the world, but I think it may be calming down already.
Dr. Yardeni, hi. It's also Samina joining in. Let's talk about what this means for countries like India. Sure, there's Japanese carry trade unwinding, but Indian markets have never been a beneficiary of borrowing in yen and investing it in Indian equity. The carry trade is our own story, the Indian rupee and the dollar, and sometimes may be a Swiss franc. So do you feel that Indian markets are insulated at this stage, and maybe we could be beneficiaries of everything else going wrong on the Japanese carry trade?
Well, I do. And look, if the Japanese carry trade isn't, is still going to be a problem, and it creates some sort of global issue in the global credit markets, causing a global recession, then obviously India would do poorly in that kind of environment. We would all do poorly in that kind of environment. But I think what we've seen is that inflation has come down quite dramatically. By the way, I think one reason that inflation has come down without a global recession, certainly now without a recession in the US and without a recession in India, is that we've actually seen a depression in the Chinese real estate market, try to offset that by dumping goods in global markets. And so we've seen a lot of deflation, a lot of price cuts in the exports of China, and a lot of high value added kind of goods, including automobiles. I think that in turn is depressing Germany, which used to be able to sell a lot of cars in China. Now they have competition with all that. So this has all allowed central banks to stop tightening, start moving towards easing. And that suggests that the global economic outlook is pretty promising. And I think the US and India both benefit from that kind of outlook.
Dr. Yardeni, just from the Indian perspective, trying to understand whether India now continues to look or looks like an increasingly attractive market from the context of foreign flows. Since the start of this year, at least, foreign flows haven't really come in. There was a thought that post the elections and post any political uncertainty being moved away, you would see that. It's been quite the reverse. Do you see that picture changing?
Well, I think that foreign flows will contribute to the bull market in Indian stocks. I think a lot of foreigners would like to just get a sense that the Modi government following the election will still be able to get through a lot of the reforms that are necessary to make the Indian economy more competitive. But a lot of that's already happening. Infrastructure spending is certainly occurring. A lot of the kind of transportation problems that India faces with regards to global companies, I think those will be resolved over time. And so I think foreign investors will continue to increasingly go to India. The only problem is it's not cheap. It's not as though it hasn't been discovered. The Indian stock market has done extremely well, but rightly so.
Right. Dr. Yardeni, one quick question. As an investor, what should one be looking to do? Should investors be waiting before they make portfolio changes? Should it be incremental tweaks? Should it be big adjustments with all the information that we have at hand right now?
Well, I have to admit that I am in sort of the Warren Buffett camp and the Professor Siegel camp that believes that stocks should be held for the long run. You buy good quality stocks with maybe paying dividends, you put them away, and you should do very well over time. Trading stocks is a full-time job. So if you have a job, it's pretty hard to do it. But I would say that this sell-off presents some opportunities, particularly in technology in the United States, as well as financials. So I think we'll see some opportunities in the U.S. And India, I think, will continue to perform well.
Okay. Well, Dr. Yardeni, thanks so much for joining in today. I've just signed up for Yardeni Quick Takes, and we'll look forward to reading In Praise of Profits. Well, that's the view from Edward Yardeni, and believes that India could be in a sweet spot. The yen carry trade unwind, one of the principal reasons for the sharp drop, he believes at least. And he believes that that is probably more or less done. At least that's the submission that I got. Let's wait and watch if that indeed turns out to be true. But, you know...
Just one more thing in terms of summation. I found it very interesting that this jobs data that shook up the whole world for the last 24 hours, he's saying it's the weather. It's the weather, especially in Texas, hurricanes, which caused less people to come out and look for jobs, caused the unemployment rate to go up, highest in several months. And caused, jobs data to look skewed. And that's a great perspective to have, considering it caused such a huge fear.
No, and my only thing is also with this whole Japanese carry trade, while we've got pretty emotional about this yesterday as well, and world markets did, the fact is, and I've read quite a bit of stuff that came out and said that Indian markets are not about Japanese carry trade, because you've got three cross currencies. You're borrowing in Japanese yen, if you're a US investor, your home country bias is dollar, then you have the yen, and then you're investing in India. That's not how the Indian investments have worked. So I think to some extent, while the sentiment could have been weak, fundamentally we seem insulated from these Japanese carry trade problems, I think. In fact, I think we could be a beneficiary of some sorts because the rate differential between the dollar and the rupee still maintains, fortunately for us.
Yeah, but the sentiment impact of if a yen carry trade unwind impacts NASDAQ in particular.
You know, I read a note somewhere that said if you are not unhappy in May, there's no reason why you should be unhappy today because the Forex is exactly at the same level it was on the 4th of May that it was yesterday. The Japanese yen and dollar.
Okay, the Japanese yen dollar.
Yeah.
I think the only thing to see is large infrastructure projects in India which are funded.
So that's about 5 or 7 companies that do that.
That's the limit of maybe impact. But so we are looking basically set for I think a bounce back in line with Asia today. Yeah. The extent of it, of course, will have to be seen, but definitely a very quick recovery. And those SIPs, I mean, the fact that domestic investors come in, something that Chris Wood said yesterday as well, that money is waiting in the wings, it has to be deployed, and the kind of numbers, corporate results we've seen thus far have not been too disappointing.
No, not at all. And in fact, that's the trade setup for the day today, because we will see a bounce back. And I suspect it would well be a trending day today. So somehow I really doubt that it will be a pop-up and that will be the stable level. So because remember, while CBOE VIX came off from the highs yesterday, it was still up 39%. So volatility is the nature of the game. We'll probably see a pop-up and then maybe a trending day ahead if indeed the European markets support and come out shining well too. So that's one thing to keep in mind. Where would the bets be? I think almost everybody was in a unanimous view yesterday that the secure growth stories, you probably see the money, where the money's gone in the past, you probably see defense names, you probably see the ones which were beaten on the most yesterday. Real estate and autos in particular might be the first ports of call. Metals is difficult to call simply because there is still, you could argue maybe a global growth worry, and therefore I don't know if metals have as sharp a bounce, even though that was the index that was pummeled the most in trade. But autos and real estate, relatively much safer bets. Reliance had big shorts piled up yesterday. You could see a bit of a bounce there too. Just that, the pockets with maximum shorts. And I think at 8:30 we'll probably try and talk about that in detail too. But watch out for that. That's the nature of the beast. Remember, the bounce this morning at least is not looking as strong as the kind of fall that we had. And therefore it sets us up whether we have a trending day, whether we start off with a bit of a bounce and then we take it higher. Let's wait and watch if that were to happen. Yeah, difficult to call.
We gave up almost 700 points yesterday, but recovering about 200. So what they call this usually is a dead cat bounce, right? So you may see a little bit of recovery, a little bit of short covering, but it's too naive and too early to say that we're done with this momentum cut that the markets witnessed yesterday. It's going to be grinding, it's going to test patience, and that's what markets are going to be all about for the next couple of days as well. That's what we have. We also have a bunch of earnings, and this morning the earnings is not bad at all. A couple of them that I have and that I've been tracking actually would do well. And also I think very quickly on this whole Bangladesh impact on trade, that may impact a few companies, but I think from a more macro perspective, defense stocks could stand to gain significantly more this morning. As our borders become uncertain, Bangladesh, you have neighbors that may turn out to lead to some sort of uncertainty politically. And if that does happen, you will see stocks that play the defense piece. So your Zen Technologies, your PDL, HAL will only sentimentally stand to gain if that really happens. So I think that's one thing you want to keep an eye on over the next couple of days. And this is what a number of promoters and founders of defense companies have told us. They've said, as your borders are unstable and unsecure, one thing you need to do as a country is invest in that.
But you're traditionally for India.
And the way we are located now, it seems like.
So for India, Pakistan and China have
You've also got Sri Lanka.
Have been the issue. No, in terms of an actual threat, Pakistan only because it's funded by China, and China because it's that huge of an economic power. Bangladesh, from our perspective, I mean, Sheikh Hasina was seen as friendly to India.
But she's out now. That's the big problem.
She's out now. There is an army chief in. I mean, we'll have to wait and see.
It's a lot like what happened in Sri Lanka last year, right? Yeah. I mean, Sri Lanka debt is largely Chinese debt, but nevertheless, it could be, it could just be a theory. But it'd be interesting to see how these stocks actually play out in trade. But in terms of earnings, we've got a whole bunch of them that we are tracking. I'll start with Bharti Airtel. Good earnings. Brokerages also like what they've seen in terms of Bharti Airtel. Revenues were up 2.4%. EBITDA was up 1.8%. Margins have remained largely flat, so there's been no changes on the margin front for Bharti Airtel. Net profit is up about 128%. Now that is largely on back of an exceptional item that we've seen in the quarter. Mobile services ARPUs have also risen 1%, and there was that one-off interest waiver that was what impacted profitability in a big way. In terms of standouts in India, revenue for the first quarter of the financial year rose by 10%. Mobile revenues have increased 10%, driven by higher revenue per user and continued growth in customer base. Africa, while revenue in constant currency has seen an uptick of 19%, the devaluation of the local currency there is what's actually impacting margins and profitability of the African business. ARPUs have also improved in this quarter versus what we saw in the same quarter last year to 211 rupees versus 200 on back of good quality and high revenue, high profitability customer base being added for Bharti Airtel. So all in all, good numbers. Dolat Capital and Citi both seem impressed. They've said they're largely in line and they like what they see with Bharti Airtel. Along with that, a few more to stand out in terms of earnings was Brigade Enterprise. Revenues were up 65%. We've seen them report their pre-sale numbers, and those have been phenomenal so far. Once again, a good quarter for Brigade Enterprise. Revenues up 65%. Net profit has gone up nearly 4x. Margins have improved marginally at 27.2 versus 26.8. And expenses have also grown by about 53% in this quarter for Brigade Enterprise. Now, what the management has said in their release is that while the revenue number looks pretty healthy, they believe that because of elections and few auspicious dates in the previous quarter, their top line hasn't grown that significantly or as significantly as they would have liked. Real estate continues to be the standout. The revenue there came in at 707 crores. Leasing revenue fetched about 260 crores. Pre-sales also were up 10% in this quarter, and average realizations have also improved. So all in all, good quarter for Brigade Enterprise, and looking ahead as well on back of those pre-sale numbers, it seems like the performance of Brigade could continue and they would deliver quarter on quarter. Tata Chemicals, on the other hand, another tough quarter, and we've been reporting on Tata Chemicals now for quite some time, and it doesn't seem to be ending in terms of the pain that this company is feeling. Revenues are down 10%, EBITDA is down 45%, margins have again crashed almost 9% to 15.1 versus 24.7. Profits are down nearly 70% for the quarter. Revenues came in lower due to lower realizations across various regions. Profits were impacted by lower soda ash prices and demand that continues to remain subdued. Earnings also impacted due to price cuts due to rising competition. So remember, for Tata Chemicals, soda ash is their biggest business. That continues to remain subdued. While there's a little bit of recovery in China, the demand for glass in Europe still remains muted in the US. So until that cycle doesn't start seeing a significant and sustainable recovery, Tata Chemicals will continue to be faced with disappointing earnings. The stock was already down 3% in trade yesterday. It'd be good to see what it does this morning. Maybe another rough start for Tata Chem.
Everything was down.
Yeah, actually, apart from ITC, Tata Consumer, those ones did okay.
Marico did okay, HUL did okay. Yeah, Brigade also, good to see a company, real estate company whose stock has run up and has also got decent numbers, because the real estate pack and their results have been mixed, I would say, in most cases.
Yeah, just that one thing on Tata Chemicals. atrocious quarter, just that it's come exactly in line with estimates. The Bloomberg estimates to the T on net profit, 190 crores, 191 crores, and on the margins as well. I mean, 15.5 was the estimate, 15.1 is the delivery. So that's probably the only solace for a Tata Chemicals today, because otherwise the stock should be might be taken to the cleaners. But because it's in line with estimates on a day which is moving up higher, maybe the reaction could be a bit more. Bit less.
Kinder.
Yeah, kinder is the word.
Kinder.
No, and I think one thing that may help is the intent of sort of cleaning up their balance sheet. They are looking at doing some debt repayment. So if that comes to the rescue, maybe it will work. But if I mean, just because your expectations are low and you deliver weak numbers doesn't mean you should be saved, right? If today's day of trade.
Yeah, today is also going to be, I would say, a bit strange in the sense you're coming off a massive sell-off. So you might have a rising tide, which helps even those who don't deserve it as much in that sense. ONGC could be one of those because numbers are, I would say, its revenues are completely flat. At least EBITDA has beaten estimates in terms of expectations. There's a hit, of course, on margins and profits. The biggest reason is lower gas production and realizations, which have weighed on earnings, and this was, in a sense, expected. So let's look at the core numbers. Revenues are completely flat at 1.66 lakh crores. EBITDA is down 6%, but it's better than what was expected. EBITDA margins have also come off at 13.07%. And net profit down is 11%. So in terms of production performance for crude, it's down 1.4%, gas is down 4%, and realizations are also down. But in terms of that same point, that you are pretty much on what is expected, and if you have a bounce back, will an ONGC get some benefits of that? Will have to be seen. But I would say a mixed set of numbers overall. Same for Bharti Hexacom, actually, and revenues were okay, up 2%, EBITDA down flat. Margins have also come off from 47% to 45.8%. Net profit is up 129%, but there were exceptional items. The growth which you're seeing is led by smartphone additions, and there's an improvement in mix and in ARPUs. That is your revenue per user. Average revenue per user. That could be seen as a plus point. Their total customer base, number of customers, has also gone up marginally. The average revenue per user number is important for this space. That's also gone up slightly. So that is really one to see. Their 4G customers have also gone up, and a fairly decent jump in the number of network towers. So I would say Bharti Hexacom is another one which has seen a bit of a mixed quarter. Deepak Nitrite, though, will be seen positively because you have a good set of Q1 numbers for Deepak Nitrite for the quarter. 47% up on operating profit, margins are up 240 basis points as well. Their phenolics segment has driven growth, and this is an important component as a starter sort of chemical for anything you want to make, from medication to paints. So that has seen good growth. Operational efficiencies have also led to an improvement in profit margins. The quarter-on-quarter numbers, though, are not looking as great, and that's something that investors might keep in mind. Those earnings are down because of lower other income, so not because of any operational issue. Meanwhile, there are two segments to look at. One is phenolics, like I mentioned, that grew 22.6%, while their advanced intermediaries grew at 1%. So I would say phenolics segment has moved things well for Deepak Nitrite. Others, of course, I'll come back with, and a whole host of those Bangladesh impact stocks, but why don't you?
Yeah, no, very quickly. Just a couple of names. One of them is Pakka Limited, because in yesterday's session, the warrants and the shares allocation for Pakka Limited came out. This is PAKKA, and SBI Mutual Fund and Carnelian Capital have gotten significant, or have taken significant allocation both in shares and warrants of the company. I would suspect this should be viewed positively. So do watch out for Pakka Limited in the session today. Could be a stock that could do well in trade. So that's the first one. BEML, there is an EBITDA hit. Sales up 10% versus a guidance of 20 to 25%, and continues to be at an negative EBITDA margin and a PAT loss. So and a stock which is expensive. The only point is it may correct a bit. I mean, I don't know if it bounces back because the market will take the tide higher, but it is done below what it had guided to, and which should probably come and hit the stock today. So that's the second one on my radar. And Schneider Electric is the third one, which could be an interesting one because the numbers were very strong. Revenues, okay, but margin performance very strong, PAT performance much better, and therefore Schneider Electric could be another stock that could actually see some bit of green in the session today. So do keep an eye out for that one.
Right, that's of course a whole bunch of stocks that we will be tracking in today's day of trade. You've also got a whole bunch of earnings, the likes of Shree Cement, Tata Power, Lupin, PB Fintech, PFC, Bajaj Electricals, but Bhatwata India are some of the counters that will be reporting earnings. You've also got a brand new listing that will be debuting on the street. Akim's Drugs, most people on the street were quite constructive on this one. Good valuations, good business. The response to the IPO was phenomenal, and the listing this morning will also be pretty solid. But amongst other earnings, Tamina, we've got a whole bunch of other ones. You want to start with those, and then we'll add to that list as we go along?
Just a couple that I wanted to talk about. One is Indigo, because of the notes out on it this morning. And I have a question for you, Samina. Delhi, Bombay, 18,000 rupees for more leg room. They're not quite calling it business class or first class. Would you pay that premium?
No, there's no way I'm paying that.
So that's their product. That's the product that they've launched yesterday that MK and Citi have a view and a positive view on. Remember, Indigo has is a market leader with a very hefty market share, 65-66%. They've unveiled their business class offering. They're calling it Indigo Stretch. And the first one is going to be the Mumbai-Delhi route, which is the busiest route, has a lion's share of all passenger flying in India by mid-November, so just in time for the festive season. Introductory prices at 18,000 rupees. You never know, with the way flight prices go up, this might actually be a good deal. And as a result, MK has set a target price of 5,300 for it, an upside of 25%. Citi has maintained a buy with a target price of 5,200. It will be launched first on 12 metro-to-metro routes. There's a whole host of, and I'll go through this quickly because my colleague Mahima will come in with a more detailed piece. But the Bangladesh piece, I just want to talk about it a bit. And there's been huge political upheaval over the last 24 hours in Bangladesh, once again highlighting what a stable democracy we are in an otherwise a very insecure kind of neighborhood. BEML was one stock Neeraj spoke about. They have exposure in Bangladesh. There's a whole host of FMCG companies that have a huge presence there. In fact, nearly half of Marico's international business, 44% of it comes in from Bangladesh. Imami, Asian Paints, Pidilite, these are Jubilant has a subsidiary there. So there are a whole host of companies which could see some impact. Defense companies, like you said, have had orders to build in Bangladesh. Telecom companies also have presence there. So you could see some of that impact weighing down, because right now there's no clarity on whether the violence has been quelled and these businesses will be hit or not.
Indeed. And just to go back to earnings, we've got a few more. I don't know whether Neeraj, you covered V-Mart, but no, they've swung back into a profit. So this is going to be an important one to watch on trade today. They've also added more stores for the quarter. The numbers were good. Profit came in at 12 crores versus a loss of about 20 crores that we'd seen in the same quarter last year. Revenues have also seen a growth of 16%. So V-Mart could be one stock that could see some buying in today's day of trade on back of swinging back into a profit. Another one to the list of good earnings is BLS International. Profits were up 71% to come in at 121 crores versus 70 crores. Revenues have also grown 28.5% at 492 crores versus 383. So BLS, good earnings. V-Mart, strong numbers. Triveni Turbine, I know Neeraj has mentioned, again, strong earnings there. Motherson Sumi Wiring, profits have jumped 20%. Revenues have also grown 17%. So these are three more companies that will report or have reported good earnings, and the markets will be rewarding them and on the get-go this morning. But of course, the focus remains on D Street at large. Whether or not you should be buying the dip, whether or not you should be using the dry powder that you've kept aside, anticipating a correction. From what we understand, Neeraj is standing by with more on that. Neeraj, is interesting. I spoke to a lot of people yesterday, and while people have been sitting on dry powder now, all the way back from October 2023, yesterday most people came out and allocated 10% at least of the dry powder that was sitting on the sidelines. So it does seem like every dip is getting bought into. Now, whether that's the case and whether that should be the case, please tell us.
Yep. So $1 million question, right? Buy the dip or stay put. Now, the key questions facing all investors, or Indian investors at least, will Indian markets again see the buy on dip? Will geopolitics coupled with recession fears outweigh India's growth promise and growth stability? And how deep can the yen carry trade impact be? Some of these are not answerable per se, but what we've tried to do is just get you some global opinion from the notes that have come out this morning. So Victor Schwetz of Macquarie has put out a note essentially summarizing what dangers are investors facing. He says that the sell-off was precipitated by confluence of events, potentially disruptive unwind of yen carry trade being one principal reason, perception that the Fed is behind the curve, investor concerns that the tech bubble is bursting, again goes back to the yen impact, and geopolitical adventurism. In his note, he says that when the West is seen this volatile, some economies or some authoritarian regimes might go on political adventurism. And that is something that he's characterized. Now, whether that leads to some more geopolitical tensions, who knows? But his point is that, he's asking whether does it require to join the stampede or create a buying opportunity, because yesterday's move he's called a stampede, and he says that although stampedes are inherently unpredictable, we view it closer to irrational, thus creating a buying opportunity rather than selling opportunities. So that's the first view that has come in. CLSA, which has wrote a note on Japanese equities, says that this was less a growth scare than a panic about the yen, specifically for Japan. And CLSA believes that Japanese equities are now might be bottoming out. And for back home, I'm just using this because Japan was the most impacted stock market. And Jeffries on India says that the risk is on the downside, given one of the longest streaks of a bull run. They maintain their defensive stance, and their preferred large cap laggards are private lenders, staples, L&T, and two-wheelers. So if you believe Jeffries, this is the nature of stocks you should buy. If you believe Macquarie's Victor Schwetz, maybe this is a buying opportunity. And if you believe a lot of people that you hear on NDTV Profit, then selectively go out and buy, because the views are still divided. Back to you guys.
Right, that's of course, now you need to take a call whether you want to buy the dip, stay put, but one way or the other, if you've got to create significant long-term wealth, staying in is probably the best one can do. It's not timing the market, remember it's time in the market, and that's what anybody who's created significant wealth will tell you. Implied Nifty is indicating to a good start, 200-point uptick after yesterday's big fall, so it's a sea of green this morning after global equity markets sold off substantially in trade. We'll take a break. We'll come back. We'll tell you where all the F&O action is. Yesterday, of course, we threatened the 20-day moving average, but this morning, the setup looks relatively better.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with, What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. This is India Market Open. Well, it was a very volatile day of trade yesterday, but can we expect short covering in the futures and options space today? Let's wait and watch. But how are Qs panning out? Now, yesterday was a day of trade where the Nifty came off by quite an extent. The underlying, in fact, well, dropped by as much as 2.7%, and we, at one point in time, were below the mark of 24,000. 24,000 at the moment becomes a crucial point, and sure enough, the Nifty will take support around there. Should we see strength earlier on in the session today, you never know, we could potentially see a bout of short covering too. Yesterday was a day where we saw unwinding to the tune of nearly 4% as far as the August futures are concerned. Moving on to the Bank Nifty, this is where we actually saw fresh shorts building in. We do know that this particular index has so far been a lot weaker as compared to the Nifty, and it's well off its life highs at the moment. This one also tested 50,000, this big round number yesterday as well, but it closed above that, and that perhaps is something where bulls could potentially take solace from. Now, as we move into the options market and talk about how things are faring there, perhaps unexpected lines, a lot of writing around higher level calls, and still just look at the kind of traction that we've seen around the 24,000 put. The most amount of open interest, which means that it certainly will, throw up some amount of support, some amount of resistance as well towards the downside as far as 24,000 is concerned as well. Moving on to Fin Nifty, again, it's going to be a tough one to call. We've seen expansion in option premium, so it's always a positive, especially given traders in general like to sell, this particular Fin Nifty expiry. But moving on in terms of stocks, naturally it was a day of trade where we saw a lot of red. Dr. Lal Pathlabs, Samvardhan Motherson, PI Industries, Canfin Homes, all of them looking at shorts. Among stocks which saw unwinding, well, there was only long unwinding largely. Birla Soft, India Mart, Granules, Chamal Fertilizers and MCX. But the question really is that can we expect a short covering today? Well, let's get an expert we have. We have Amit Goel of Amit Ventures who's joining us on the show. Amit, morning. Thank you so much for joining in. Well, let's start off with your view on the Bank Nifty, because that clearly is taking everyone by a little bit of surprise here. But I believe you have a contrarian view. How are you looking at things here?
Hi, good morning, Agam, and thank you for having me again. And very good morning to all your viewers. Yes, I do have a contrarian bullish view on Bank Nifty, simply because I feel that whatever fall that we have witnessed in the last few trading sessions has probably, the time has come for it to cool off or something. The global cues also point to us in that direction, especially if you look at Nikkei, the way it has bounced back yesterday with a 9% up move today. Even the futures in the US market show that we are probably looking for a positive open today. Since why I'm referring to the global cues so much is because the fall also has been pretty much led by the global cues and not really the domestic parameters. So I'm trying to play the contrarian view here in Bank Nifty simply because I do see a support building up at 50,000 levels. If you notice the option chain also, the 50,000 put has a lot of strength over there. And yesterday the way it was defended points me towards this fact. Now, the kind of view that I want to play out is slightly different. I would start with an intraday view, wherein we would, at about 10 o'clock, once the market settles, and if the Bank Nifty spot ranges between 50 and 50,200, we would start with selling the 28th August expiry 50,000 put. It's a naked put, mind you. But since it's in the intraday and once the market is settled, we start with that. We will have a spot SL at 49,500. Suppose the market falls below, and by that time we would probably make a loss of about 5,000. But if the trade works out in our favor and we do see a bout of short covering and there is a rally in Bank Nifty, we could hold on to this position to extract the maximum gain of about 14,000. But if traders want to hold on to it overnight and if they are in profits only, they could consider buying the 49,000 put as an hedge and convert this naked put on an overnight basis into a bull put spread, which is a bullish trade.
So an interesting strategy, and to remind our viewers, under no circumstances, if you are new in this market, should you be able to take an overnight position without buying the recommended, outlier, as well as Amit has mentioned. In this case, of course, it will be the 49,000 put, because it becomes an extremely risky bet to carry on a naked short overnight. That said, at the moment, though, it's a fairly simple and straightforward strategy that Amit is looking to play on an intraday basis. And with that, that's how he's looking at the Bank Nifty. And it does seem like we could potentially see a good day of trade as far as the benchmarks are concerned, given the kind of volatility and relative stability when it comes to global markets, at least for today. But that said, Amit, let's move on and talk about LTI Mindtree as well. Why is that one on your radar?
So I was looking at the price action. Obviously, if you look at the most of the F&O stocks, we would see a very strong downward move. Creating fresh shorts here probably does not offer me a great risk to reward on a higher time basis. So I was looking at possible reversal candidates. And interestingly, when I noticed LTIM's price action, it was what you would term as a bullish Morubozu candle, wherein the open and low were the same and it closed near the top. While it was still a negative close of about 2%, I still feel that given the price action at the lower levels, there is some strength building up here. This is again a contra view, simply because the market has fallen so much. I do not have a great risk to reward on the downside, so I'm trying to play on the upside. Here the trade is very simple. It's a simple bull call spread, wherein we will buy the 29th August expiries 5,400 call and sell the 29th August expiry 5,500 call, which is basically a bull call spread, and we will play for the upside. We will keep a rupee stop loss of about 3,500 since the strategy is a debit spread and we lose on account of time decay. The maximum profit on this trade is likely to be about 8,500 if we, if the counter moves in our favor and sustains that move. The maximum, the margin required is about 35,000. The trade logic is simple, that we see a price reversal in terms of the candlestick pattern, which is known as the Morubozu, and also the global cues again seems to support this view, especially with NASDAQ futures trading upwards of about nearly 2% in the morning. Thanks.
All right. So a simple, straightforward bull call spread where you're in fact buying a 5,400 call, and against that you're selling a 5,500 call, playing LTI Mindtree for the upside with a maximum profit potential of around 8,500 rupees per contract. But on that note, Amit, taking a moment to thank you for joining us and taking us through your views in the markets, and of course helping us with a handful of option strategies that we can work around with. With that, it's back to you.
Thank you for that. Another big story really, and what's been happening is what's happening in Bangladesh, where Sheikh Hasina had to be airlifted in a chopper. She was brought to the Hindon base in India, and there are reports now that she could be going to London. Protesters actually broke into her residence and she had a threat to her life. Now, while there is political uncertainty in Bangladesh, and we've been talking all of this time on the impact of the Japanese yen on India, the fact is that the neighborhood matters more because of the extent of investment Indian companies have made in Bangladesh. In fact, Mahima, with the help of all her colleagues in the research team, has put together this pretty extensive list on how much skin in the game we have when it comes to Bangladesh. Yes, Mahima?
Right, Tamanna. So a lot of companies have a significant presence in Bangladesh. I'll break it down for the viewers sector-wise. From the FMCG pack, we have Marico, where 11% of the total revenue comes from Bangladesh and 44% of the total international revenue comes from Bangladesh. They've said that by FY27, this 44% will go down to 40%. Imami also has a wholly owned subsidiary in Bangladesh, and FY24 around 17,400 revenue. So 6% of the revenue for Imami comes from Bangladesh overall. For Asian Paints also, it has a wholly owned subsidiary where they have around 10 crore of revenue in FY24 that came from Bangladesh, 12 crore of royalty came from Bangladesh, and they have a 12 crore loan also from the Standard Chartered Bank of Bangladesh. Now Pidilite has two subsidiaries in Bangladesh. The first subsidiary, which is a specialty chemical limited, around 4.23% of the contribution in FY24 came from that particular subsidiary. Moving on, Jubilant Foodwork had recently completed full acquisition of Domino's in Bangladesh. They hold around 26 stores in Bangladesh overall. Godrej Consumer also has a wholly owned subsidiary in Bangladesh. Now VIP industry, this is an interesting one where 30 to 35% of their capacity is sourced from Bangladesh. So this could be one of the company that could get impacted. Now a bunch of railway companies also have significant presence in Bangladesh. RITES has a contract supply of 200 broad gauge coaches, around 906 crore is the value. For Texmaco also they export freight cars to Bangladesh, and for defense companies, Garden Reach total contract of $16.5 million was a contract that is there with Bangladesh. Now oil companies, a lot of oil companies like Indian Oil companies export sulfur. Telecom companies also has significant, Airtel also has significant presence, and Sun Pharma, and a power company like Adani Power's subsidiary has 100% of the power generated is sourced to Bangladesh. So all of these companies could see impact because of the crisis that Bangladesh is facing right now.
Thank you for that, Mahima. This is, of course, going to have a long-drawn impact in terms of trade. But remember, in terms of India's trading partners, Bangladesh is the top 25. It used to hold position number 4. Now it's 5. In FY24, the trade or the exports to Bangladesh have already declined 10% in the year behind us, but nevertheless significant and will have impact sentimentally, at least on some of these companies that Mahima highlighted for us. Well, we're gearing up for trade, and it's going to be a morning where it'll be interesting to see whether new fresh longs come in, or of course it's going to be on the Nifty or stock specific. Rajat Bose, Sunny Agarwal both joining in with a technical and a fundamental view. Rajat, I'll start with you on the charts. After yesterday's big fall, today comes as no surprise where we should get a dead cat bounce in trade. If we do get a gap up of 200 points on the Nifty, intraday, do you think it's going to be 200-point gap up and then we build on those gains, or that would get sold into, in your opinion?
Yeah, I would say that there is a possibility of a gap up opening, and then we need to see how things pan out. But the fact that the VIX rose by 42.23% in a single trading session, even on June 4, it went up by only 27%. So this is the VIX rising in such a manner is definitely something to worry about. But if you are talking about a dead cat bounce, then I would say yes, because the place where this whole crisis originated, I'm not talking about Bangladesh, that maybe a stock-specific impact will happen. But if you look at the two key indices today, as they are trading now, that is Nikkei and Hang Seng. Nikkei has given a bounce, but the problem is that in Nikkei there is a death cross. When I say death cross, it means the gradients of the two moving averages are sharply down, and the shorter term 20-day moving average is piercing the 50-day moving average there. So even if you see a bounce there, even there it would fall. And the S&P 500 also did not show much of, it is almost trying to test its 200 exponential moving average. And since we are highly linked with all these through the FIIs putting in money here. So, as you said, a dead cat bounce can happen, and at higher levels you can expect some selling, and what used to happen earlier, that may not be the case this time. That is, one day fall and immediately a rise, that may not happen. This fall may continue after a dead cat bounce, and the three levels to watch out for will be 23,900, 24,000 to about 23,900 will be a very important level. After that, it can slide down. If that gets taken out, then there could be a fall to something like 23,800, and thereafter 23,500 will be a major support area. Regarding the Bank Nifty, yes, Bank Nifty is not as much weak as the Nifty, but even Bank Nifty has got some problem in the sense that it needs to take out 50,100 mark. If that level is taken out decisively, thereafter there will be another level to watch out for, and that would be a major key resistance level. Now, earlier that was a support, that is 50,400. If 50,400 can be taken out by the Bank Nifty, then you will see that the bank is giving a bounce.
Rajat, if anybody initiated fresh longs on the Nifty yesterday before closing, would you advise them to exit those longs in opening this morning or hold the position till closing today?
I would say that, had somebody initiated a long position in the Nifty at the day's low yesterday, then you have some cushion. And as I said, if 24,000 gets taken out on the downside, then it would be better for that person to actually exit. Otherwise, I would say that one can stay put with a stop below 23,897.
Sunny, good morning to you. Great to have you on as well on what is an important day. The question is that when there is sort of a pullback after a harsh day, what do you bet on? Is it going to be those spaces which got hurt the most? So, for example, real estate was one of those, your defense, PSUs, etc. Or are you going to stick to the safe bets or the pharma and consumption stories of the world?
Yeah, good morning, everyone. I think one should stick to the companies where we have seen a very good set of earning growth during the June quarter, and outlook is pretty good. A case in point, companies like Amber Enterprises, Indian Hotel, Zomato, Just Dial, Natco Pharma, Amara Raja Battery. I think ultimately these are those companies which will find a lot of institution interest on every dip. So maybe a gradual deployment is the right strategy. I don't know at what levels the Nifty will stabilize. But ultimately, what I believe is that companies which are likely to deliver healthy earning growth over the next 3 to 4 quarters, they are the first companies where we will see a lot of institution and HNI retail buying emerging at a lower levels. Among the large cap, few good names, few companies which we like are among the defensive name is ITC. I think HPCL is one of the company which we like among the ONC space. We have seen a decent correction in the crude oil prices also, and at the same time, with their Barmer refinery going on stream in next one and a half year, I think the company has potential to deliver close to 30 to 40,000 crore EBITDA 2 years down the line, trading at 80,000 crore market cap. I think it's a pretty good risk reward ratio. ICICI Bank among the bank, I think a very a good kind of a trajectory where we will see a 13 to 14 kind of percent advances growth. So I think a few mix of few large cap and decent mid-size name can be added gradually over the period of next 2 to 3 months.
Right. Rajat, what are you doing with oil and gas stocks with crude at a 6-month low? I'd imagine HPCL, BPCL, IOC could extend in today's trade. Could they be good trades today? Rajat, what would you do with oil and gas stocks in early trade on back of crude weakness?
Well, regarding, say, IOC, what I would say is that don't get into a long position in all of the three. But if you say you want to play IOC because it has given a hammer line formation. That means that the last 4 days of fall is likely to be arrested, and unless yesterday's low, which is 166.99, roughly 167, if that is not taken out decisively, then you will see a bounce back here. But unless it crosses 183 to about 185 range, you cannot expect much of a rise. But at lower levels, IOC or say HPCL, BPCL, you can take positions. But when you are taking positions here, since they have built up a base in the recent past, you should be taking it for the medium term. When I say medium term, I would say that 6 months plus kind of time horizon.
Okay. Well, Sunny, we'll take a moment to thank you because I understand we have to let you go, but really appreciate you joining in for this very quick perspective. Appreciate your time. Rajat, stay on. Lots more to talk. We'll take a quick break, come back with more.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
Back with India Market Open right here on NDTV Profit. Let's get the implied open up on the screen. It's a day of bounce because Asia is a sea of green, by the way. And don't look at Nikkei. I mean, that's an outlier, but other markets too are not doing too badly. China may be a bit soft, but the rest of the Asian markets are not doing too badly. So that's the first piece. Now, with that in mind, what are the stocks that you should keep an eye out for? By the way, keep in mind the US futures are also trading much better right now. So that's the other thing that you got to keep in mind, that the mother market is trading with a tick of green. Rajat, you responded to Samina's question that you will see what to do once the markets start off higher for yesterday's longs. But I'm asking you, what are the stocks that you would trade this morning afresh at the prices that we'll see at 908 or 915?
Well, I have already chosen my stocks, and they are two stocks where I'm going to suggest going long. The two stocks, despite the fact that there is some problem in Bangladesh, but I feel that Asian Paints is not very heavily dependent on its Bangladesh operations. And even if it were, since I'm giving a short to medium term call, there would not be much of a problem. And because there is blood on the streets, this is the time when you buy stocks of this kind. I would give two targets, medium-term targets of 32.45 and 3400 for Asian Paints, and the stop loss should be placed below 29.80 on a closing price basis. 113-point stop loss banta hai for a medium-term trade in Asian Paints. This stock is actually showing a saucer formation. The base building is already through. It is one of those stocks that actually showed some green tick yesterday. And the other stock that I like is Adani Wilmar. I like this stock hell of a lot, although I do not have a personal position, because each time I wanted a personal position, I actually find that I've already given recommendation to my clients. So SEBI norms doesn't permit me to take a position in this. But Adani Wilmar has a flat base formation, and from there it is going up and heavy volumes. So Adani Wilmar has much less risk, but it has got much higher potential. The targets are 411, 434, and 459. And I would suggest a stop loss below 357. It closed yesterday at 382. This is a stock that you hold. You are definitely going to make money over the medium to long term. This stock looks really very good. And I have no predilection that I am talking on a channel that is owned by the same group.
Okay. Point well noted. Watch out for Adani Wilmar, by the way. The shifting of the FMCG business from the Adani Group into Adani Wilmar strengthens that too. By the way, standard disclosure, Adani Group owns NDTV Profit, and you're watching NDTV Profit. So just make that disclaimer while we speak about some of these group stocks. But it's the market at large which deserves attention. Rahul Arora, CEO of Nirmal Bang Institutional Equities, joins in. Rahul, good morning. Thanks for joining in. I remember our conversation when we nudged that circa 25,000 mark. You were a bit skittish then. The markets have come off a little bit for reasons which may have been different from your reasons. Be that as it may, we are 4% lower, and we may see a bit of a bounce today because the global markets are doing okay. What is your house's central message to clients this morning for Indian markets?
Good morning, Neeraj. Thank you for having me on the show. So I think, Neeraj, if there's one thing that the markets have taught us over the last months is that every time you get such a large dip, and the two most recent ones being the union budget and the central election results, they're being very easily bought into. And, it just goes back to the same conversation that we keep having in terms of the liquidity that's there in the market of, about 1.5-2 lakh crores of cash on the sidelines. And the kind of pressure that fund managers are in, given their CTCs are locked into their own funds, that, if you get a dip like the kind that you got yesterday or on the 4th of June on the budget, you don't want to wait for it to go much lower. And therefore, you see a lot of follow-up buying that's coming in through the next day. I still think this is just a minor blip. I still don't think valuations have aligned themselves to what the earnings potential or the earnings outlook of India is. I think, the earnings outlook is not that strong, basis what we've seen in the ongoing earnings season as well, which is the first quarter of the fiscal. Ideally, it would have been nice if we could have had a 10-15% healthy correction and you would have stocks that were down about 25, 30, 35%. But I think at least, Neeraj, the one good part is that a lot of the market that was seeing excesses, that's where the valuations are coming off also in a material fashion, whether it's autos, defense, capital goods, EMS players, consumer durables and electricals. I think that's where you're seeing the maximum pullback, chemicals. So that's a bit heartening to see that where the excesses were there, they're pulled back. But I still think that we really can't call this a correction, Neeraj. I mean, it's as you very rightly pointed out, it's only 4% at a 25,000 Nifty. For it to make a meaningful dent, it would need to be 10-15%. But I think this might be very easily bought into, is my sense.
Rahul, does that mean if you're an investor who's been sitting on some dry powder or cash, now may not be the best time to add incrementally to the markets, or would you start adding incrementally at these levels?
No, so I think, Samina, the point is, what could make the market fall from here? I mean, you survived 2 wars, you survived a 5% inflation, you got a bit of a hiccup on the election day, you had the increase in capital gains taxes, and yet you're at a 25,000 Nifty. Now, obviously, what we saw yesterday is not the end of the phenomena as we know it, because I think if you get into a situation